Have you ever found yourself in a hole and instead of stopping, you just kept digging, hoping to somehow find a way out at the bottom? What if the real way out was to simply stop digging and climb back up, even if it meant leaving something behind? This journey we're on, this venture into the world of crypto, is filled with incredible highs and devastating lows. It's a landscape where fortunes can feel like they're made overnight and just as quickly vanish like a desert mirage.
Ow.
There is never, ever a guarantee of returns when you invest in this space. Crypto is, by its very nature, a realm of high risk, a place where the currents can change in an instant. To navigate these waters successfully, it's not just about understanding the technology or the markets. It's about understanding ourselves, the very psychology that drives our decisions when we're under pressure. One of the most powerful and treacherous undercurrents in this ocean of volatility is a concept known as the sunk cost fallacy. This cognitive bias is a silent saboteur of sound judgment. It's the whisper in your ear that tells you to keep going, to double down, to risk it all, not because the future looks promising, but simply because you've already invested so much. It's the feeling that you've come too far to turn back now, even when every rational indicator is screaming at you to stop. The sunk cost fallacy occurs when we allow the weight of our past investments, our time, our money, our emotional energy, to chain us to a failing course of action. We continue to pour resources into a losing battle, not because we believe it can be won, but because the thought of accepting the initial loss is too painful to bear. It's a decision driven by emotion, by ego, and by a desperate desire to rewrite the past, rather than a logical assessment of the present and the potential for the future. Let's paint a picture to make this clearer. Imagine stepping through the glittering doors of a grand casino in Las Vegas, the air thick with anticipation and the jingle of distant jackpots. In your pocket, you have $100,000, your entire stake for the adventure. You approach the high-stakes tables, confident and ready. The first few hands are a blur of bad luck. The cards just don't fall your way. Your initial stack of chips begins to shrink. Hours pass. The vibrant energy of the casino floor now feels oppressive. The sounds of celebration from other tables feel like a personal taunt. But then, another voice emerges, a more primal, desperate one. This is the voice of the sunk cost fallacy. It screams at you, you can't leave now. You're down $90,000. You have to win it back. It dismisses the $10,000 in your hand as insignificant compared to the mountain of loss you are facing. This voice convinces you that the only path forward is to go all-in, to bet that remaining $10,000 on a single high-risk wager, hoping for that one miracle that will make you whole again. You're no longer playing to win, you're playing not to lose. You are chained to the memory of that $90,000, and it's dragging you deeper into the abyss. This is the very essence of the sunk cost fallacy. Your past losses are dictating your present actions, pushing you toward an even worse, more reckless decision. The wise move, the move of a survivor, would be to stop, to protect the capital you still possess, and to acknowledge that the money already lost is gone. It is a sunk cost. The volatile, emotionally charged world of cryptocurrency trading can feel exactly like that casino floor. When you watch the value of your portfolio plummet during a market downturn, the feeling can be identical to watching those casino chips disappear. The money you invested, perhaps earned through months or years of hard work, starts to feel like a ghost, a phantom limb you can still feel but can no longer use. The temptation to win it back can become all-consuming. You might see a coin that has dropped 90% and think, I've already lost so much. What's the harm in putting in a little more? If it just goes back to where it was, I'll break even, but this is a trap. Your decision should never be based on the price you bought at or the amount of money you have already lost. Those are facts of the past. The only question that matters right now is this. Based on the current situation, the project's fundamentals, the market's sentiment, and its future potential, is this a wise investment today? If you wouldn't buy it at its current price with fresh capital? Then clinging to your existing position out of a desperate hope to recover past losses is falling victim to the sunk cost fallacy. This journey is not a sprint. It is a marathon of immense proportions. The path to building something of true, lasting value is often slow, methodical, and unglamorous. It doesn't happen in a single explosive market pump. It happens in the quiet hours, with teams of developers writing code, line by painstaking line. It happens in the meticulous process of building a community, fostering trust, and delivering on promises. Real, long-term value and sustainable success are the fruits of relentless building, of persistent hard work, and of navigating challenges with a clear head. Progress may feel slow at times, almost imperceptible. There will be moments of doubt and periods where it feels like you're retaking one step forward and two steps back. But every small step of genuine building, every problem solved, every feature shipped, is a brick being laid in the foundation of a structure that can withstand the storms. It's in these moments of steady progress, not in the frantic emotional gambles, that true enduring worth is created. We must learn to value this process and have faith that each deliberate action contributes to a stronger future. Therefore, I urge you to trade wisely and stay safe. Arm yourself not just with market analysis and technical charts, but with self-awareness. Recognize the emotional triggers that can lead you astray. Before making any decision, especially when you are deep in the red, take a step back. Breathe. Ask yourself if your choice is being driven by a rational assessment of future potential or by the emotional weight of past losses. Set clear rules for yourself before you even enter a trade. Define your entry point, your profit targets, and most importantly, your stop-loss, the point at which you accept the loss and walk away. Protect your capital as if it were your lifeline, because in this world, it is. Remember the lesson of the casino. Sometimes the bravest and most profitable move you can make is to cut your losses. Preserve what you have and walk away with your head held high, ready to seize a better opportunity tomorrow. True strength isn't about never falling. It's about knowing when to stop digging and having the courage to climb out of the hole.